Hey everyone, welcome back to Corporate Decoded, the place where we dive deep into the complex world of corporate finance and pull out the juicy bits for you to digest. Today we're dissecting a massive shareholder report from Vanguard Horizon Funds, and let me tell you there is a lot to unpack here. This isn't just a look back at the last year, it is a deep dive into performance costs and the financial health of several key funds. Before we get started, if you appreciate getting straight insights from these filings, make sure you are subscribed. We break down these complex documents so you don't have to. We also have a Discord community linked in the description below where we discuss these findings and more. Alright, let's get into it. This filing covers Vanguard Horizon Funds for the period of the 1st of October 2024 through the 30th of September 2025. Think of this as an annual checkup on a few of their major investment funds. We're going to look at how they performed, what it cost to invest in them, and the nitty-gritty financial details. First up is the Vanguard Strategic Equity Fund Investor. Shares the ticker symbol for this one is VSEX. The report states that for the 12 months ending the 30th of September 2025, this fund actually beat its benchmark, which is great news for investors. They mentioned that optimism about deregulation, tax cuts, and artificial intelligence was sometimes balanced by worries in interest rates and trade policies. The Federal Reserve even started cutting interest rates again in September 2025 after pausing in December 2024. Across the board, large company stocks did better than smaller ones, and growth stocks significantly outperformed value stocks. Now let's talk about costs. For a hypothetical $10,000 investment in the investor shares of the Strategic Equity Fund, the costs for the year were just $18. That is only 0.17% of your investment. That is incredibly low and definitely a good sign. Looking back over the last decade is always important. If you had invested $10,000 in the investor shares of this fund back in 2015 and held it until the 30th of September 2025, that $10,000 would have grown to a very impressive $27,411. Compare that to the MSCI US Small Plus Mid Cap 2200 Index, which would have grown to $26,872, and the Dow Jones US Total Stock Market Float Adjusted Index, which would have grown to $34,286. So the fund did well, but it is interesting to see how it stacked up against its benchmarks over that long period. For the one-year period ending the 30th of September 2025, the investor shares saw a return of 13.01%. Over 5 years, it was 17.13%, and over 10 years, it is 11.91%. The MSCI US Small Plus Mid Cap 2200 Index had a 1-year return of 10.66%, 5-year of 12.97%, and 10-year of 11.40%. The Dow Jones US Total Stock Market Float Adjusted Index edged it out with a 1-year return of 17.46%, 5-year of 15.69%, and 10-year of 14.64%. So while the fund performed well, it's tracking slightly behind the broader market index over that 10-year stretch. The fund's net assets as of the 30th of September 2025 were a massive $585 million. That is nearly $10 billion. It holds 570 different investments, and its portfolio turnover rate was 62%. This turnover rate suggests they are actively buying and selling securities, which can impact costs. The total investment advisory fees for the year were $2,917,000, which is about $2.9 million. Looking at where the money is invested, the fund has a significant portion in industrials at 18.2%, then information technology at 14.5%, and financials at 16.8%. Healthcare is also a big chunk at 11.2%. This diversified approach across major sectors is pretty standard. Next up is the Vanguard Capital Opportunity Fund Investor. Shares the ticker VHCOX. Unlike the Strategic Equity Fund, this one underperformed its benchmark for the year. The report mentions that security selection, particularly in healthcare and information technology, hurt performance. However, it also notes that in absolute terms, the fund performed solidly. The economic commentary about deregulation, tax cuts, and AI impacting the market optimism is the same as the previous fund, indicating a broad market theme. For the Capital Opportunity Fund Investor, shares the costs for a $10,000 investment were $45 or 0.42%. This is higher than the Strategic Equity Fund, but still quite reasonable. If you'd invested $10,000 in this fund in 2015, it would have grown to $33,075 by the 30th of September 2025. The Russell Mid-Cap Growth Index would have yielded $28,878, and the Dow Jones Index $32,616. So in this case, the fund actually outperformed both benchmarks over that 10-year period, which is a strong showing. For the 1-year period, investor shares returned 16.37%. Over 5 years, it was 14.32%, and over 10 years, it was 14.44%. The Russell Mid-Cap Growth Index returned 22.02% for 1 year, 11.26% for 5 years, and 13.37% for 10 years. The Dow Jones Index returned 17.46% for 1 year, 15.69% for 10 years. So while the fund's 10-year return is good, it is interesting to note the very strong 1-year performance for the Russell Mid-Cap Growth Index. This fund is quite large with net assets of $24, $663 million, again nearly $25 billion. It holds fewer investments though at 193 compared to the previous fund. The portfolio turnover rate is much lower at 11%, suggesting a more buy and hold strategy which can lead to lower trading costs. The investment advisory fees were significantly higher too at $50,409, reflecting the larger asset base and possibly the advisory agreement. The sector breakdown here is quite different. Information technology is the largest holding at 30.1%, followed by healthcare at 23.4%. Consumer discretionary is at 12.4%. This heavy concentration in tech and healthcare suggests a focus on growth-oriented sectors. Next up is the Admiral shares for the Capital Opportunity Fund. The ticker is VHCAX. This fund also underperformed its benchmark for the year, with similar reasons cited as the investor share healthcare and information technology sectors hurting relative performance. Again, the report mentions solid absolute performance. The cost here for Admiral shares was $38 for a $10,000 investment, or 0.35%. This is lower than the investor shares, which makes sense as Admiral shares typically have lower expense ratios for larger investments. With an initial investment of $50,000 back in 2015, this fund grew to a substantial $194,067. That is a fantastic return, showing strong growth over the decade. The Russell Mid-Cap Growth Index would have brought in $175,418, and the Dow Jones Index $196,051. Once again, the fund's 10-year performance is very competitive. The Admiral shares have a 1-year return of 16.46%, 5-year of 14.40%, and 10-year of 14.52%. These are very strong numbers, and you can see how the lower expense ratio likely benefits investors over the long term. Compared to the benchmarks, again, the 1-year return for Russell Mid-Cap Growth was higher at 22.02%, but the fund's 10-year performance is very attractive. The fund's net assets are listed as $24, $663 million, which is the same as the investor shares. This is likely because Admiral shares are just a different share class of the same underlying capital opportunity fund. The number of holdings and turnover rate are also identical, indicating they are indeed the same fund with different share classes. Notably, the report mentions that during the reporting period, the expense ratio for the Admiral share class was reduced. That is always good news for shareholders. The sector composition here is identical to the investor shares, with a heavy weighting in information technology, healthcare, and consumer discretionary. This reinforces the fund's growth-oriented strategy. Now let's look at the Vanguard Global Equity Fund Investor Shares, ticker VHGEX. This fund also underperformed its benchmark for the year. The report mentions that while the US economy was optimistic with deregulation and tax cuts, global central banks like the European Central Bank and Bank of England were cutting rates. Stock selection in information technology helped, but healthcare was a drag on performance. Regionally, North America stock selection also detracted from results. The cost for a $10,000 investment here was $43 or 0.40%. This is quite competitive for a global fund. An initial $10,000 investment in this fund in 2015 would have grown to $29,918. The MSCI All Country World Index net would have brought in $30,811. So in this case, the fund slightly underperformed the benchmark over the 10-year period by about $800. For the 1-year, investor shares returned 16.30%. Over 5 years, it was 11.24%. And over 10 years, it was 11.58%. The MSCI All Country World Index net returned 17.27%. For 1 year, 13.54% for 5 years, and 11.91% for 10 years. So the fund's performance is slightly behind the global index on all measures. Net assets for this fund are $770 million. It holds 189 investments, and its portfolio turnover rate is 36%, which is moderate. Investment advisory fees were $15,988, or about $16 million. Geographically, North America is the largest region at 61.4%, followed by Europe at 18.6%, and Asia at 15.6%. This breakdown reflects a global equity fund's mandate. Finally, we have the Vanguard Strategic Small Cap Equity Fund Investor, shares the ticker VSTCX. This fund outperformed its benchmark over the year. Again, the economic commentary is consistent with the broader market themes. They also note that large cap stocks did better than small and mid cap stocks this past year, and growth significantly outpaced value. For this fund, stock selection in healthcare, consumer staples, and consumer discretionary boosted performance the most. The cost for a $10,000 investment here was $24 or 0.23%. This is very low and quite impressive for a small cap fund. A $10,000 investment made back in 2015 in this fund grew to $28,810. The MSCI US Small Cap 1750 Index grew to $27,466, and the Dow Jones Index grew to $39,210. So while the fund did outperform its small cap index, it lagged behind the broader market index significantly over the decade. For the 1 year, investor shares returned 12.60%, over 5 years it was 17.89%, and over 10 years it was 11.16%. The MSCI US Small Cap 1750 Index returned 9.87% for 1 year, 13.41% for 5 years, and 10.63% for 10 years. The Dow Jones Index had a 1 year return of 17.46%, 5 year of 15.69%, and 10 year of 14.64%. Here we see the fund's strength over the 5 year period significantly outperforming its small cap index and being competitive with the broader market index. Net assets are $2 on 148 million. It has 601 holdings, which is a lot, indicating good diversification within the small cap space. The portfolio turnover rate is 66%, indicating active management. Investment advisory fees were $577,000, very low for a fund of this size and turnover. The sector breakdown shows a strong emphasis on financials at 19.1%, industrials at 18.6%, and information technology at 13.9%. Healthcare is also a notable 12.7%. This blend of sectors is fairly typical for a small cap growth oriented fund. Let's quickly touch on the accounting side. The audit fees for the fiscal year ending the 30th of September 2025 were $161,000, and for 2024 they were $180,000. Total non-audit fees to the Vanguard complex were quite substantial for both years, in the millions of dollars, covering audit-related tax and other services. This is standard for large investment companies. Now, for the deepest dive into the financials, the schedule of investments. This is where you see exactly what each fund owns. For the Strategic Equity Fund, as of the 30th of September 2025, we see holdings like Roku Inc., Match Group Inc., and Alphabet Inc., Class A and C. These are major companies, and it is interesting to see how they fit into a fund focused on strategic equity. The Strategic Equity Fund's statement of assets and liabilities shows total investments of over $9.5 billion. Net assets were $9,585,102,000. The net asset value per S-Hair for this fund was $40.63. Looking at the statement of operations for the Strategic Equity Fund, investment income was $139,567,000. Total expenses were $15,447,000, and net investment income was $124,120,000. Realized net gain from investment securities sold was a significant $894,769,000. The change in unrealized appreciation was $104,298,000, leading to a net increase in net assets from operations of over $1.1 billion. The statement of changes in net assets shows a net increase of $530,434,000 for 2025. This is quite a bit lower than the $2,026,816,000 increase in 2024, which highlights the market volatility and differing performance across those periods. The financial highlights for Strategic Equity Fund investor shares are really telling. For 2025, the total return was 13.01%. In 2024, it was a strong 32.29%, and in 2023, it was 16.99%. 2022 was a tough year with a negative return of minus 14.81%. The ratios of total expenses to average net assets remain consistently low at 0.17%, which is a major positive for investors. Now, for the Capital Opportunity Fund, the statement of assets and liabilities shows total investments in securities of over $24.9 billion. Net assets were $24,663,235,000. The net asset value per S-Hair for investor shares was $95.6, and for Admiral shares it was $220.7. The difference in NAV between share classes is common due to different expense structures and potentially dividend policies over time. The statement of operations for this fund shows a massive $1,975,048 in realized net gain from investment securities sold. Change in unrealized appreciation was $1,394,961, leading to a huge net increase in net assets from operations of over $3.5 billion. This indicates a very strong performance in terms of capital gains for this fund during the period. The statement of changes in net assets shows a substantial net increase of $1,548,242 for 2025. This growth is driven by those strong operational gains. Looking at the investor shares financial highlights, the total return for 2025 was 16.37%. This is robust. The 5-year return is 14.40% and the 10-year is 14.44%. The expense ratio is consistently low at 0.42%, which is very good for an actively managed growth fund. The Admiral shares show similar strong returns, 16.46% for 1 year, 14.40% for 5 years, and 14.44% for 10 years. The expense ratio is even lower at 0.35%. It is clear that for larger investors, the Admiral shares offer a cost advantage. For the Global Equity Fund, the statement of assets and liabilities shows total investments at $7,757,957. Net assets were $7,770,430. The net asset value per S-share was $42.29. The statement of operations shows investment income of $113,600,000. Total expenses were $31,303,000, leading to net investment income of $82,297,000. Realized net gain was a significant $857,570,000, and the change in unrealized appreciation was $241,408,000. This resulted in a net increase from operations of over $1.1 billion. The statement of changes in net assets shows a net decrease of $655,248,000 for 2025. This is a notable change from the $1,455,466,000 increase in 2024. The large outflows from capital share transactions redeemed indicate investors withdrawing money, which could be a reaction to the underperformance against the benchmark. The financial highlights for Global Equity Fund show a 1-year return of 16.30%. The 5-year return is 11.24% and the 10-year is 11.58%. The expense ratio is around 0.40%, which is reasonable for this type of fund. Finally, for the Strategic Small Cap Equity Fund, the statement of assets and liabilities shows total investments of $2,153,643,000 and net assets of $2,148,497,000. The net asset value per S-share was $43.88. The statement of operations shows investment income of $25,524,000 and expenses of $4,106,000. Net investment income was $21,418,000. Realized net gain was $136,187. $1,000 and change in unrealized appreciation was $66,880, $1,000 leading to a net increase from operations of $224,485. The net increase in net assets from operations was $224,485. This is a solid result, although lower than the $414,917 increase in 2024. The significant increase in capital share transactions issued reflects strong investor interest and inflows into this fund. The financial highlights show a 1-year return of 12.60% for this fund. The 5-year return is a remarkable 17.89% and the 10-year is 11.16%. The expense ratio is incredibly low at 0.23%. This fund has a very attractive combination of strong long-term performance and very low costs. Let's touch on the audit fees again. For the Strategic Equity Fund, the total audit fees were $161,000 for 2025 and $180,000 for 2024. Non-audit fees across the Vanguard complex are in the millions, but this is standard for a firm of this size and importance. The trustees approved the advisory arrangement for the Capital Opportunity Fund with PrimeCap Management Company. They considered the quality of services, investment performance costs, and economies of scale. The report highlights PrimeCap's long-term approach and independent research. They concluded that the fund's expense ratio and advisory fee rate were below the peer group average. This is a really positive sign showing that the trustees are actively looking out for shareholder interests. At the end of the day, Vanguard's Horizon funds are a mixed bag, but with a lot of strengths: the Capital Opportunity Fund and the Strategic Small. Cap Equity Fund show very strong long-term performance and competitive cost, making them standouts. The Strategic Equity Fund also delivered good results. The Global Equity Fund underperformed its benchmark, which is a point of concern, but we do see that its expenses are managed well. The low costs across all these funds are a huge advantage for investors over time. Now, looking at these numbers more broadly, we see a consistent theme of strong management and a focus on keeping costs low. Vanguard is known for this, and these reports confirm it. The Capital Opportunity Fund's Admiral shares particularly stand out with exceptionally low expenses and strong long-term growth. The Strategic Small Cap Equity Fund's performance and extremely low expense ratio make it a compelling option for investors seeking small cap exposure. While the Global Equity Fund saw some underperformance against its benchmark, its overall strategy and expense management remain competitive. The report emphasizes the importance of a long-term perspective, especially in a market that can be influenced by global economic shifts and regulatory changes. When we look at the sheer scale of these funds with net assets in the billions, for some of them it is clear that Vanguard is a dominant force in the investment world. The fact that they can maintain such low expense ratios even with these massive asset bases is a testament to their operational efficiency and commitment to shareholder value. The slight underperformance of some funds against their benchmarks is standard in active management, but the long-term returns and low costs tend to smooth out those short-term fluctuations. The report mentions the Federal Reserve's actions and global interest rate changes, which really underscores the macroeconomic factors that impact all investments. Overall, these Vanguard Horizon funds seem to be well managed with a clear focus on delivering value to their investors. That is our breakdown of the Vanguard Horizon funds filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate finance. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.